The Hong Kong Stock Exchange is closed at the Financial Central District as Typhoon Haima approaches in Hong Kong, China. October 21, 2016. Bobby Yip. Tokyo. Reuters. Asian stocks steadied and U.S. Treasury bond prices fell slightly on Thursday as the risk aversion triggered by the latest flare-up of tensions between the United States and North Korea began to settle. MSCI's broadest index of Asia-Pacific shares outside Japan, MIAPJOOOPUS, stood little changed after dropping 0.6% the previous day. Japan's Nikkei, N225, rose 0.2% and Australian shares gained 0.1%. South Korea's Kospi, KS11, was little changed. Asian stocks were supported after seeing Wall Street shares close barely lower overnight, trimming losses, as investors appeared to brush off geopolitical concerns. And the flight to safety into U.S. Treasuries also abated overnight. The 10-year Treasury note yield US 10YTRR initially fell to a 6-week low of 2.212% as bond prices rose, but pulled back to 2.251%. U.S. equities managed to cut its losses towards yesterday's close, and while the VIX volatility index did pop higher, it still remains at an overall low level. Furthermore, the benchmark Treasury yield also climbed away from lows, said Junichi Ishikawa, senior forex strategist at IG Securities in Tokyo. These developments suggest that risk aversion caused by geopolitical tensions in North Asia are temporary in nature, as long as it does not involve military conflict. Bids into the Japanese yen and Swiss franc, currencies that find demand in times of geopolitical anxiety, also tapered. The dollar was steady at 110 yen and 30 cent JPY after going as low as 109.560 overnight, its weakest in 8 weeks. The Swiss currency was little changed against the dollar at 0.9637 franc CHF after surging more than 1% the previous day. The euro was flat at $1.1759 while the dollar index against a basket of major currencies stood steady at 93.534 DXY after dipping 0.1% the previous day. Currency markets focused on the U.S. Producer Price Index data due later in the session. Investors will study the numbers to get a feel for the U.S. inflation trend and any impact the data could have on the Federal Reserve's monetary policy. The New Zealand dollar was 0.2% higher at $0.7354 NZD4. The Kiwi bounced from near one-month low of $0.7309 struck overnight as the Reserve Bank of New Zealand took a less dovish tone than some had feared. The RBNZ held rates at a record low of 1.75% on Thursday and reiterated that policy would stay loose for a considerable time to come. In commodities, crude oil stretched gains after rising overnight on data pointing to declining U.S. inventories. OR Brent crude LCOC1 added 0.15% to $52.78 a barrel, inching towards a 12-month peak of $52.93 set at the start of the month. Gold prices were nudged away from recent highs as broader risk aversion receded somewhat. Spot gold was 0.1% lower at $1,275.56 an ounce Zhao after having spiked the previous day to a near 12-month peak of $1,278.66. Reporting by Shinichi Saoshiro, editing by Eric Meyer.